ABC News Now. Good to know.
Another day, another 250 points. A 250-point drop in the Dow Industrials, which are now down to their lowest level in 12 years. The NASDAQ today was down 54. Since February 10th, the day the administration announced its plan for supporting the banking system, stocks have lost nearly 14% of their value. Washington may be working overtime to reassure investors, but clearly Wall Street is not convinced. Here's Betsy Stark.
Investors picked up where they left off last week on a selling spree that sent the Dow to its lowest level in 12 years.
People are sort of looking at this market as one that we don't know when the bottom's going to be put in, so fear is really dictating trading right now.
One of the biggest fears is what will become of the country's biggest banks. Will things get so bad they will have to be nationalized, taken over by the government?
The whole nationalization fear scares the investors because if they're invested in these stocks, they get absolutely nothing. That's the common shareholders get wiped out.
The Treasury Department said today that starting Wednesday, it will begin subjecting about 20 of the nation's largest banks to stress tests. Any bank that cannot prove it has enough cash to weather an even more serious downturn, including higher unemployment, may face the prospect of the government becoming one of the direct owners of the bank. Analysts say first to face this outcome is likely to be Citigroup, which has already received $45 billion in government aid. Today, there were reports that Citi has asked the government to convert its bailout loan into as much as a 40% stake in the bank.
Investors don't like the fact that the government is the largest single shareholder in a bank like Citigroup.
That raises fears of the N-word. Nationalization is a dirty word on Wall Street.
We're not living in Cuba. We're not living in China. This whole system is built on, a democratic process, and part of that democratic process is free market capitalism.
But many analysts say fears like these are exaggerated.
This is about temporary nationalization. This is about taking it over for a short period of time, probably 1 or 2 years, and returning it to the market at a profit for taxpayers.
Betsy is joining us here on the set now, and I'm curious why nationalization is considered such a dirty word. The Obama administration has been at pains to say we're not going to nationalize the banks, but a lot of economists, and you heard some there, say this actually could be a positive step if a couple of banks were taken over for a couple of years.
A couple of things, Charlie. I mean, one of them is just about money. If banks are taken over by the government, then private investors could see the value of their shares either severely diluted or wiped out altogether. But the other thing is philosophical. Wall Street is the bastion of free market capitalism, and nationalization, even if it's meant to save the banks, is something that happens in socialist countries. It's not supposed to happen in the United States.
But those investors have been almost wiped out already, haven't they?
Well, it's not entirely rational. You're absolutely right about that, but there certainly is great resistance to this on Wall Street.
All right, Betsy Stark reporting tonight.